come to this region, it is my mission and desire to explore and get to know more about this region.
Very excited to be part of this discussion because, as I mentioned before, the ecosystem is getting more and more complex. Regulations are becoming more and more complex, and I think it's time to join forces as well to build more efficient and more resilient ecosystems.
I welcome this forum to open gates to that and also collaborate within ourselves. Thank you.
A beautiful story, or in terms of, there's a benefit to working with the family office, benefit of the family office working with the institutional. Good morning, everyone. It's a pleasure to be with you this morning. I've come in from London, and I'm sure there are many of you who have come in from various other places in the world. It's great to be with you this morning. My name is Mami Okwafo-Koto. I'm a partner from A&O Sherman, which is an international law firm. I specialize in advising sovereign wealth funds, pension funds, government entities, central banks on all aspects of asset management. When I was approached to moderate this panel, it was very exciting, a very exciting opportunity for me, because we're looking at co-investments, unique opportunities and investments that we're seeing across all our investors, by which our panel are very educated and very able to provide you with some insights on this. So without further ado, I'm going to allow them to introduce themselves briefly, and then we'll get right into it. Please do feel free to ask any questions that you might have. Feel free to interject, or we can raise the questions at the end. Thank you. I'll start with you.
Thank you. Good morning. Good morning, everyone. My name is Licia Zhu. I'm the principal for 76 Columbus. It's a single-family office out of the United States. I am actually based in Dubai. So the family office primarily focusing on alternative investments across technology and some real estate as well. So in the alternative space, we are focusing on venture capital, fund of funds, and hedge fund. In terms of the geographic coverage, we actually cover majority of our investment exposure in the United States. But come to this region, it is my mission and desire to explore and get to know more about this region and collaboration with Asia, which is where I'm originally from.
Salam alaikum. Good morning, everyone. First, thank you for the organizers to have this event today. It's very well organized. It's a nice venue, a nice location with, I think, a lot of meaning about union and coming together, which resonate quite well with the panel discussion as well. So my name is Mohamed. You will hear some kind of French accent, so I'm French, of Algerian origin, and I actually have this mix of culture as well, which I really like about the UAE as such, because the UAE is a very diversified place, and it does as well go into the discussion we are going to dive into. So I'm the CEO of Haya Insurance. So I'm a bit exotic, I think, here, looking at the crowd. But more and more, insurance and life insurance is becoming one of the main actors into the wealth management industry worldwide. There is this ecosystem which is building up where life insurance are taking more and more space as well. So Haya Insurance is a dedicated life insurance company based in the UAE. We also offer the wealth management, pension for companies and individual savings for the individuals. And I'm very excited to be part of this discussion because, as I mentioned before, the ecosystem is getting more and more complex. Regulations are becoming more and more complex. And I think it's time to join forces as well to build more efficient and more resilient ecosystems.
Good morning. My name is Mehmet Akgünay. I work at the International Finance Corporation, which is the private sector investment arm of the World Bank Group. And our sole focus is investments in emerging markets and frontier markets. So being here amongst you, we're always looking for collaborations and co-investment opportunities, and I welcome this forum to open gates to that and also collaborate within ourselves. Thank you.
Just jumping back to you then, if I may, I know you mentioned that you work with the IFC, and I think when we think about family offices investing, we are seeing increasingly collaboration with entities, organizations such as the IFC and others. How do you see that developing, and are there any challenges with that?
So there are two avenues which we are able to work with family offices. One is on the philanthropy side. And I think there's a good panel in the afternoon that's going to focus on that as well. We're able to construct concessional finance resources using money from philanthropic organizations. And usually our leverage on the investment is 1 to 5. So for every dollar invested, we're able to place $5 of money. Now, that's one part. The second part is we do give a high importance to mobilizing private capital. So we're always open to co-investments, co-lending, co-investments in equity. We do have a broad range of interest in terms of product, and we do have long time experience in the markets, emerging markets and frontier markets. And so those are the two avenues. I think better collaboration could be held. In terms of blockages, I think efforts like today's forum is good opportunities, but I think we could work better to know each other, to explore areas of opportunities to be looked at together.
Please.
Very interesting. You elaborate on foundation upfront. So I'm affiliated with a couple of foundations. So all family business enterprise affiliated community, one's in Hong Kong and one's in Singapore. So it is interesting to explore what's happening here in the region. But in terms of the, what I have noticed that in those kind of communities is primarily comprised of all families. But with the institutions, how, it's very interesting you will play the role in this kind of community. In your experience, or you have done the cases with some of those foundations, what are those narrative of impact aspect you actually find like most interesting to collaborate on the foundation side? Is it a social impact, or is some which drivers on those?
I mean, I think it should be driven by the foundation's inherent needs and wants. We work across the SDGs, the UN SDGs, and we do have a big focus on climate because roughly 45% of all our investment is climate, tied to climate financing. But as I said, all our investments are part of the SDG investment cycle. So we would work with foundations to find their needs and wants to be able to structure something that would help them achieve that goal.
And is that collaboration always a beautiful story, or in terms of, there's a benefit to, working with the family office, benefit of the family office working with the institutional investor, or are there pain points and challenges that we should know about and seek to work through or be aware of?
So on the investment side, I think we do have give importance to corporate governance, and I think it was one of the theme areas coming up in this discussion. So that would be a point, potentially pain point. We would want the institutions that we work with to come to a certain level of corporate governance, not just in terms of to be able to work with us, but part of our mandate is also supporting companies grow, and I think it's part of that. But beyond that, I think we're able to do anything in terms of products, industries. So it's a unique blend of opportunities we give, and as long as we see sort of common themes, I think it's more of a win-win situation.
Lexia, I know that you have connected with a number of family offices, and so it would be useful to hear your experience and if it's the same as what Mahmoud said or something different.
I think we spoke this a little bit earlier. So our family office primarily investing, I loosely call that advanced technology, come from the US. So we invest in primarily in blockchain and AI. As myself come from TriFi, worked in JP Morgan and a few other fintech companies in the US before coming to the private side. And I founded my own blockchain company in the past. What I have noticed with families, I think depending on geolocation, so in the US, a lot of times we do direct investments, like us, we invest in funds, VCs and across the board. But since I came here, I have, with my limited exposure and open to build more relationship and by making new more friends. But for my understanding, I noticed the partnership in this region seems very valuable aspect of the families, and especially some of the family friends and network I have, they have very, I call that domain knowledge in some aspect of it. So loosely in our side, so we are quite strong in a way of a domain in the crypto. Both me and my partner really in this industry going up and downs, learned a lot of lessons and pay a lot of tuition on this. So I found some other families are really big on the medical care, healthcare systems, industry or real estate, and for instance. So what I noticed is from here, as I learning more and more about this region, I really keen in to see what other families that we can partner with. But in Asia, which is a lot of my network come from, in the family space, where It is a combination of both, I think. There are elements of direct investments, just write the check, but then there are some other elements, especially if family have a lot of exposure in the actual business, in the way of growth stage companies, for instance. They are much more keen in to look for either institutions or families to partner as well. So in Asia, what I have seen is a combination of both.
And I suppose when you speak about healthcare, I suppose, you know, if you're from the US, you think about insurance. And so if we just move on to the insurance sector, what opportunities do you see for investors in that sector, and particularly family offices or other institutional investors?
Yeah, there is actually a number of opportunities in that. The first one is perhaps, you know, our drawback as insurance companies, we can be sometimes conservative. But I think for risk mitigation as well, because when you look at these investments, you want to look as well as ways to protect your capital and also ways to make sure that risks that you may not foresee at first are being taken care of. And this is really something where the added value of the, I would say, of our core activity, which is really the risk management, the risk mitigation, come into play. The other thing as well is the access to liquidity, of course, through insurance solutions, which allow you to basically get liquidity over a period of time and to have it smoothed on over this period of time. And the other thing that I see, especially in these opportunities, is when you have compliance and cross-border opportunities, where you know, and I'm sure it's the case for all of you, regulations are getting heavy, complex. You need to navigate through them. And very often, insurance have ways in terms of taxes, in terms of money circulation and so on, which allow you to do some or to achieve some of these opportunities. And when you speak about family offices, in terms of opportunities, investments, you really look most of the time at the very long term and also what will happen from one generation to the other one. And this intergenerational legacy has to be taken care of as well from the insurance aspect, because it does include so different jurisdictions with different tax aspects, which have to be basically looked at by a professional.
And so I think when we look at, you know, when we think about technology, we know that a lot of our families, a lot of our institutional investors are thinking about technology and thinking about AI. What sort of got me interested is when you mentioned blockchain. Can you tell us a bit about that experience so that our investors can sort of understand that market a bit more?
I hope you're not regretting asking me this question. So I got asked a lot, actually, by my family office network, especially the ones come from very traditional backgrounds. Since right now this topic, digital assets, is such a industry that is picking up the perspective and perception to the across the board of the investment arena. I think there are a couple of areas I would love to share. One is, for a lot of questions I got from the family office network asked me, Lisha, should I invest in blockchain or should I invest in crypto? I don't know if they understand the blockchain, just be not in the industry. It's a very technical aspect. The short answer is, of course, absolutely. But the more complicated question actually is, what is your risk tolerance? How much you want to be learning in this industry? So general rule of thumb, I think, is like endowment style and diversification. when the industry is very young, like technology in blockchain space, as well, myself, our family is learning the AI at the moment. It's always great to put your bets in across the board different basket. So back in the days, maybe go back to the search time. I remember last time I had MySpace. I don't know if anybody here still remember MySpace.
Yeah.
And then after that, Google, Yahoo, right? So for those investors, when the technology is still in the early stage and we don't know where it goes and who's gonna be a front runner, I think the case is you just bet in the industry. So if you bet in both Google and Yahoo, I think you will get somewhere. Maybe more might not be in this forum. I think I would use the same for the blockchain space, for sure. And as far as AI, I think I'm pretty sure there are a lot of experts in this space and in the room here. For us, we are learning in this aspect. So go back to the question earlier about the families. As we think about the investing, the deal flows, where we have some connections from California as well in Asia, are we going to just look at these deals, for instance, come from healthcare, from some insurance space? It's not my expertise. So a lot of the way I'm looking at going into the AI first, instead of go through GPs like what we do currently in the digital asset space, I'm more eager to learn about AI technology from first-hand exposure perspective, maybe talking with experts here from their industry and learn more about those and get direct involvement.
When we think about sort of emerging markets, what would you say we should be thinking about, or how should investors approach emerging markets when thinking about investments? I mean, it's clear that there are opportunities in those regions, but as an institutional investor who's very experienced, the IFC, what would you say should be of concern?
I think on-the-ground knowledge is extremely important, which I think the family offices are well placed to assess. We do a lot of private deals, private equity and private debt as well. I think private credit side is growing exponentially. Last 5 years, banks have been sort of pulling out of that space because of the capital requirements, and I do see a lot of opportunities emerging in that space. Now, one thing with the private debt side, it becomes it's more knowledge intensive because you need to go through the due diligence, the legal structuring to be able to be comfortable with. So I think that takes a bit of building up the knowledge base, depending on which stage a firm might be in. And I think in exploring opportunities like that, it's always good to team up with others that are looking for partners in that space. So, but I do think it's less volatile, and in frontiers market and emerging markets, due to two things. One is there is no liquidity in that market. Well, emerging markets, you do have some liquidity. Frontier markets, that comes down, but private credit is essentially an illiquid market. So you see less volatility there for two reasons. One is because it's illiquid, a market price does not form. So it's more on perception. But a real reason for the lack of volatility is you don't see fire sales. You're not subject to fire sales. In highly liquid markets, event triggers, cause big losses, whereas private markets, especially if you're the longer term investor, I think you're more immune to that. So that's the upside, I think.
I think it's interesting because we see a lot of investors who are slightly more cautious about doing direct investments, investing by way of a fund manager. I know before we spoke about PE funds, hedge funds, co-investments. So I wondered if any of you had any experience in that area that you wanted to talk about. So exposure by way of going through a fund, so not having a direct interest, but going in through an investment vehicle, such as a fund of funds, or directly into a PE fund, or maybe even a VC fund.
We do work with we work as a funds of funds as well.
Yep.
So either credit funds or private equity funds, we do invest in the position of an LP to them. That's always, especially in smaller tickets, it becomes cost effective.
Yeah.
We do have presence all over the world, so the local presence is less of an issue, but governing assets, we do have a portfolio of 100 billion. So when going down the ticket side, it becomes more efficient to work with private equity firms. And on the credit side, we do see interesting opportunities, especially targeting SMEs with good yields, which are more platform innovations. So I think there's room to both, depending on who's the sort of the fund you're investing to and what's the added value they're giving to.
Please.
So yeah, I would actually exactly resonate what Mehmet was saying. We have exactly the same approach, but it's actually one of the consequences of the changes as well in regulation, and the regulation getting more complex. There is really a tendency, to divide between the advisory and the actual investments. Before it used to be like right pocket, left pocket, so there was not this clear divide. Today it's very clear that there is this divide, so that's the approach we are taking as well. We use a lot of the funds of funds, the feeder funds, because there is a factor of trust as well that we need to build with the end client. And also to make sure that, in terms of regulation, conflict of interest, these kind of things, we can show something which is very, very separated from between the investment approach of the final investment and the advisory that we owe to our clients.
Yeah, I think a family investments a little bit more, as an industry, loosely called that, it's a very fragmented and very family specific. So from our own experience, it is a journey of investment in terms of combination of investing in the GPs. So for some of the GP fund, for instance, later stage private equity and private credit, we would go through indirectly with the fund of fund. So we do invest in fund of fund that they do array of investments in this space. And as far as the primary exposure for the GPs, we like early stage funds, just to the interesting and a little bit more front run of the technology, and that's our take. We do co-invest as well. So we did co-invest with. We tend like the idea of if the market. So that's second point I want to make is it is really about the market whether we're familiar with or not. If the market we're not very familiar with, we tend to work with partners 100%. Or in this case, we actually co-invest with our GPs. So one GP we invest in France, they have very good exposure in Asia. So we do co-invest with a couple of deals in Singapore and turned out very good access from that way. And then one last point is it's about the market access. So some of my friends from Asia where they want to invest in the across the Pacific market and do not have direct access or exposure. So they like to go through a little more less risky as well indirect through secondary or fund-of-fund approach. I think it's really depending on one is knowledge and two is access to make those decisions.
Are there any sort of red flags that you would sort of say, don't invest in that fund? Are there any sort of 2 tips that you could give the room? And that goes to the whole panel. Are there any sort of 2 things that if you could give 2 things to say, if you see this, don't invest? Is there anything like that?
In terms of funds, I mean, I think it's the management experience is the most important portion, because you're essentially investing in the people that comprise that fund. So I think you really need to be comfortable with the expertise level and also with their character as well. So I think those are that's the biggest, most important aspect.
Yeah, exactly. I totally agree. And I think for me, the one thing which really stand out is just to be aligned in terms of interests with your end client as well, but also with the fund managers. You just need to make sure that there is an alignment of interests.
Agreed.
Then, as said before, it's all about experience. It's all about expertise, acquired knowledge, and basically looking at the management style and these kind of things.
Thank you.
So since we're in the crypto industry, it's all about due diligence, and you even cannot due diligence on a lot of aspects. So one thing one story. So we invest in one hedge fund out of Miami, and then the partner is actually quite known. And then we had 3 rounds of dinner in Miami with this partner, and we know some mutual friends as well. In terms of due diligence, we had 3 dinners together. They said if you have food together, share your food, your brothers and sisters in some culture. We said we're family already. And then one important part for this one is one very well-known LP, big LP in the industry, also invest in them. So you know where it goes. And we're like, okay, we know the manager. We have somebody very well known to back them up. Let's do it. So we invested. So you get the investors newsletter every month. And suddenly the newsletter stopped for 2 months and 3. And then we emailed the manager and contact what is happening. It disappeared, no news at all. 2 months later, we read the news on the SEC, so they are listed on the SEC. So this is a great tuition we paid to be in this industry. So our takeaway for this experience is, I think you know the industry very well, and you rely on somebody else as well to do the due diligence for you. I think in the end of the day, it's also need to trust your own guts and then do your own due diligence a little bit more seriously. So that was a now interesting, funny, but back then it was, wow, what a roller coaster experience. So yes.
Okay, so it's not enough to just have dinner. I wondered if there were any questions from the audience. Yes, please.
Hello, I invest in AI. That's my day job. I'm a fund that invests in AI. And I recently did a project over IT, crypto AI. And what I found was that we analyzed. So, as I was saying, I invest in AI companies. And I ran a project recently with one of my team to look at crypto AI. And when we analyzed the crypto AI projects that are valued in the billions of dollars, we found that the underlying AI was very insubstantial. And so my concern is that crypto is causing a massive misallocation of capital that could go into real AI companies. And I'd love to get your comments on whether you think that's the case or not.
I have seen actually the collaborations between AI and Web3 in terms of some of the innovations, especially giving the distributed ledger of the access to the data of blockchain and crypto digital assets, and or the wallet is in a public blockchain. I saw a lot of innovations and companies actually, including the one I started before. It is on the Ethereum using machine learning. It is upside, but in terms of market, in a way, for the private capital perspective, what I have seen actually is more and more capital joining into AI aspect in addition to the talent. Given the caveat, this current administration in the United States might pull attraction to the blockchain, but I think AI in terms of the industry has multiple trillion or times in terms of the capital value, in terms of market valuation compared to blockchain. Maybe that's the case in a little bit more special, but I think to your point, there are some opportunities or projects I have seen that the question would be whether they're truly AI company. Everybody say they're AI. I come from technology as my first career in JP Morgan. I cannot say I know AI very well. So I think in the end of the day, it is who this company is and what's really a problem we're tackling. But for your concern, I haven't seen significant challenge.
Any other questions?
Maybe I have a question for you. So you're quite experienced and in the network of sovereign wealth fund advisor and also feminists as well. Mm-hmm. Maybe in terms of the title or the conversation of this, can you share your experience in terms of those institutions, sovereign wealth fund, and feminists and private sector? What do you find the most, some of the advantages or opportunities you find more positive for them, actually eager to learn and work together?
Yeah, I think it's interesting because we advise a large range of investors. So we advise the very big, so the billion-dollar investors, to the very small. And I think one of the benefits for us is that often we're seeing maybe, one investor investing in TPG who's investing 5 million, but then another who's investing, 500 million. And so we're able to sort of look across and see, you know, the different concerns. And from your small investor, their concern is, you know, one, fees, but they trust the manager, they trust the due diligence, they're not going to do their own. But then when you've got your sort of 500 million investor, actually sometimes deals are taking a lot longer to close, because actually they have, you know, a large team internally who want to also look into the details of what's actually going on in regards to X, Y, and Z co-investment. So they actually want to look at the reports, and that takes time. And so sometimes, although you've got this massive check, you've also got the sort of the difficulties that go around that in order for that check to be signed off, there's a lot of red tape that goes with that. But I think what we're seeing is that there is a huge demand for co-investments because people want exposure, and sometimes they don't want to be in a blind pool fund. They actually want access to just healthcare, and healthcare in a particular region. And so certainly it's not sort of a we're not interested anymore. We're seeing some of our investors actually going into funds just because there's a promise of, you know, a co-investment opportunity. I think for our smaller investors, one of their issues is sort of experience, in that they're not so experienced to know whether that this is an amazing manager and actually that's not so good at an investment manager. And so what they're relying on is often, for example, the likes of IFC, who will look into a fund and turn it upside down and make sure that actually it really stands up to great governance. And so that's the benefit I see of our smaller investors, our family offices, working with organisations such as yourself. The lady in red has stood up, which means our time is up. I'd like to thank the panel for their wonderful contribution, and thank you for your questions, sir. And thank you everyone for your time and listening so attentively. Thank you very much.